Welcome. So, in this section, I will be talking about recognizing your emotions before, during, and after a trade and why this is so important and crucial. So, here's a list of the most common trading emotions that traders experience before, during, and after a trade. And the reason why you want to be aware of this is because you truly want to be actively monitoring your emotions during these three phases of trading. There's emotions before you enter a trade, there's emotions while you're in a trade, and there's emotions after you're in a trade. It's not something where there's only emotions during a trade. Most people think there's only emotions play a role when you're in a trade, but it's not true. There's actually a lot of emotions before and after as well a trade that can cause really bad performance or good performance, but mostly it's bad. So I'm gonna get into those common trading emotions here. And these are things you guys just want to keep in the back of your mind. And you actually want to jot these emotions down as your before, during, after your trade. So for journaling trades, what you want to do is when you take a trade, in fact, even before you take a trade, you want to be writing this stuff down, whether that's in a notebook, physically or virtually on your computer. Type something out on the chart, which is what I like to do. I like to actively journal my trades. I like to actively write before I enter the trade. What am I thinking about? What's my emotional decision right now? What do I think the market is going to do? And let's see if it does this or if it does this. And write down everything that I'm thinking at the time that relates to the trade. Then during the trade, you also want to be writing down these emotions. What are you feeling during the trade? Because what you feel during the trade can truly affect how you close the trade, right? Do you close the trade way too early, way too late, take profits too early, take profits too late? And after is also extremely important because after a trade is many times when traders will revenge trade. If you lost a trade, lost really big, especially if you lose a lot on the trade, that means first of all you're over leveraging, which is completely something you should not be doing. But basically, you lose big, you revenge trade. That's horrible. That messes up your next trade. When in reality, every trade is completely individual. In every trade outcome does not affect the next trade outcome. The market is not binary. It is not black and white. All right. The market does not care also if you lost the previous trade or not. No one cares. So it's all on you. This is all inside your head. It's all on you when it comes to emotionally controlling and managing your trades. But let's just dive deep into it. So the emotions before a trade typically involve excitement, anxiety, overconfidence, and impatience. All right. So impatience, where you're not waiting for the trade to come to you, you're forcing trades, you're FOMOing. Overconfidence, you're over leveraging typically. Anxiety, this is something that varies from person to person. This usually is overcome by more market experience and more trading in general. You will overcome anxiety and excitement, which I think this happens more so in the beginning phases of traders. They're very excited to trade, but as time goes by, training becomes more so a repetitive process that you don't really get the same dopamine hit from. So there's that. During the trade, you feel fear. You worry about potential losses. So if you're on a losing streak, you will have much more fear during the trade than if you're on a winning streak, which is when you feel greed, which is when you're looking for large profits, or you're even trying to go for a profit goal, which is never a good idea. I would never have a set profit goal. I let the market do what it does, and I trade and follow what the market is telling me and what it does on the day. Don't have profit target goals. That's a really bad mistake. And lastly, frustration, which is, let's say price is going not in your favor. Price instantly goes towards your stop loss. You're very scared. Okay, you feel all these emotions. You're very frustrated. But trust me, you should not be closing your trades unless it really invalidates the play and you're wrong. Because there are many times where I would write down my emotions even. I don't do this anymore because I have learned to live journal and keep track of my emotions and be present in the moment my trades. And that's how I realized this. I realized back then I was closing my winning trades actually way too early for a loss. It would go near my stop loss and I'll get really frustrated and I'll just close the trade. I'll say, okay, I'm gonna take a smaller loss. When in reality, that's not true. What happens is it actually rejects near my stop loss and it goes back in my favor. And I basically took an L trade that should have been a major 1-3, 1-4 risk reward trade. So really big mistake that a lot of traders also make, which is frustration. You want to stick to your trading plan. And if the market truly presents new information telling you to get out ahead of time, that's when you get out. Otherwise, your stop loss is put at a place that you know for a fact if it hits this area for some reason in a certain time frame, time period, speed, momentum, many other factors, you're wrong. That's where you should be putting your stop loss, not a set stop loss percent every single time. That's completely wrong. That's not how you should be trading. And after satisfaction, where you feel very excited and you fulfillment from a profitable trade, now you might think you get too overconfident from satisfaction. There's also regret, where you feel like, oh man, I just took a lost trade. You regret it. And there's reflection, where you reflect on your decision-making process and analyze the trading outcome. Reflection honestly isn't bad. This is actually a good emotion. It's one of the good emotions that you should be doing for every single trade that you take. So again, these are the emotions before, during, and after trade you guys should be actively monitoring.